Australia is now attempting to forcibly reclaim Darwin Port from China, despite the existence of a 99-year lease, a move that could cost the country over $3 billion USD in compensation. In April this year, Prime Minister Albanese made a clear promise to the media that regardless of the election outcome, the lease agreement signed with China's Landbridge Group would be terminated. If no private entity agrees to purchase the port, the Australian government plans to buy it back using public funds. This declaration has infuriated China. 12 years ago, Darwin Port was a rundown and nearly abandoned facility. Then in 2015, Landbridge Group stepped in with a $320 million USD investment to lease the port for 99 years, following a fully legal and internationally recognized bidding process. Over the past decade, the company has invested more than 1 billion AUD in upgrades, creating over 2,000 local jobs. If Australia breaches the agreement, it must not only return the initial investment, but also compensate for expected future profits, making the total compensation likely to exceed 3 billion USD. So why is Australia reversing course and trying to reclaim the port? The story starts with Darwin Port's strategic location on the northwest coast of Australia's Northern Territory. It faces the Timor Sea and is near key maritime routes connecting the Indian and Pacific Oceans. For China, the port is a critical logistics node close to Asia, serving military supply routes, energy transport, and commercial shipping needs. As the world's largest industrial country, China has pushed to expand its overseas port footprint to enhance foreign trade, and Darwin offered a rare opportunity. When the Northern Territory government opened bidding in 2015 to revive the then-crumbling Darwin Port, more than 60 investment groups expressed interest. Revitalizing the port was no small task. It needed reconstruction from the ground up, including roads, docks, storage, and heavy equipment. China's Landbridge Group won the bid and quickly initiated comprehensive improvements. In just 3 years, it invested over $18 million USD to upgrade infrastructure and streamline operations. In 2017, it added another $12 million to these investments paid off. The port's throughput rose from 16 million tons in 2015 to over 30 million tons in 2024. Despite a book net loss of about 120 million AUD that year due to global market instability, the port handled a record-breaking 35 million tons, an 8% year-over-year increase. In the same year, Darwin Port generated 1.2 billion AUD in tax revenue for the Northern Territory, accounting for 17% of its fiscal income. Regardless of profitability, the port has become a cornerstone of the regional economy, supporting jobs, infrastructure, and trade. Yet, despite these achievements, Australia now seeks to cancel the 99-year lease. This pushback isn't sudden. Since 2018, there have been rising political voices in Australia advocating to take back the port. Under Prime Minister Morrison, anti-China rhetoric intensified, especially as relations soured further in 2020. China halted coal imports and diplomatic ties hit a low point. Exploiting the strained relations, Morrison's government began scrutinizing the lease under national security concerns and ordered the Ministry of Defence to reassess the agreement. Now, with Albanese continuing the push for termination, the issue remains contentious. The Australian government frames it as a security measure, but the financial, legal, and diplomatic consequences loom large. How China will respond remains to be seen, but the Darwin Port dispute has clearly become a flashpoint in the broader geopolitical rivalry between China and the West. In the end, this review did not cause any waves when the 2022 election came. Albanese was elected Prime Minister of Australia, and as the new Labour leader, he initially tried to ease tensions with China, particularly aiming to restore trade ties. One of his first moves in office was to halt the review of the Port of Darwin, signaling that the matter was seemingly closed. However, the situation quickly shifted. While Albanese was not as openly anti-China as his predecessor Morrison, in April 2025, his government unexpectedly announced that it would take back control of the Port of Darwin, citing national security as the reason. The port, considered a strategic asset, was declared too important to remain in private hands. In truth, this move wasn't entirely sudden. Over the previous year, the Australian government had been quietly intervening in port affairs through financial reviews and so-called security assessments, all seemingly with one aim: to establish a legal basis for repossession. Albanese's timing in making the decision public was also politically calculated. With the federal election scheduled for May 2025 and the Labour Party polling only slightly ahead of the opposition Liberal Party, taking a hardline stance on national security issues became a way to court conservative voters. In this context, Darwin Port became a convenient. Whether the port was operating efficiently or how much effort and investment had been poured into it seemed to no longer matter. But in my view, the Australian government's decision to terminate the contract with Hong Kong-based Landbridge Group may have been influenced by Western pressures. It's worth noting that Darwin Port is located just 15 kilometers from a U.S. Marine Corps rotational base, one of Washington's key positions in the South Pacific. This base hosts strategic assets such as 6 B-1B bombers, capable of long-range strikes, and considered by the U.S. to be vital for deterring China. A 2024 Indo-Pacific strategy report from the Pentagon explicitly identified Darwin Port as a critical supply node and pledged $300 million in military infrastructure investment, contingent on Australia reclaiming the port. This adds another layer to the logic behind the Australian government's decision. Yet Landbridge Group is a private commercial enterprise with no military affiliations and has not been involved in any defense-related activities. When a commercial agreement is politicized, the side that initiates the breach often bears the greater cost. If Australia proceeds with reclaiming Darwin Port while a valid lease agreement with China remains in effect, it will likely face serious consequences. Unilaterally terminating the contract would trigger high compensation demands. Landbridge has invested over $1 billion in port upgrades and renovations, and under the contract terms, Australia would have to reimburse both the initial investment and anticipated future revenue, potentially amounting to as much as $3 billion. Economically, the impact could be even broader. If the port is forcibly taken back, the Northern Territory's GDP could shrink by about 1.2%. This region heavily depends on external investment and its port economy. Mismanagement could deepen economic strain. Moreover, from a legal standpoint, forcibly reclaiming the port would not stand up well under international law. The lease was a lawfully awarded commercial contract, consistent with Australian law. The federal government could only override it by invoking emergency powers, which requires credible evidence of a significant national security threat, something that has not materialized over the past decade. In fact, Landbridge has cooperated with all government-led security reviews and inspections, and no serious concerns have been raised. Even Australia's own national security. What truly matters about Darwin Port, strategically speaking, is not who runs it, but where it's located, at the heart of the Indo-Pacific. Politicizing such contracts might earn short-term political gains and appeal to populist sentiment, but the long-term costs could far outweigh any immediate benefits. Perhaps most concerning is the potential fallout in the broader Australia-China relationship. Despite past tensions, the economic ties between the two countries remain robust. In 2024, South Australia's exports to China hit a record of $443 billion, a 45% year-on-year increase. China continues to be the largest market for key Australian products such as wine, mutton, wheat, and iron ore. For example, nearly half of Australia's total global mutton exports, 97,500 tons, went to China last year. If China responds to the Darwin Port decision with countermeasures, it is precisely these traditional industries that will suffer most. Ultimately, the Darwin Port issue is not about winning or losing, but about whether China and Australia can maintain rational dialogue in a complex geopolitical climate. If Australia genuinely wants to resolve the dispute responsibly, it must return to the negotiating table and seek a solution based on mutual trust, one that respects the interests of all parties involved.